Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Thank you for joining us. Today, we're going to do a deep product dive into our most popular program, which are bank statements. So I'll introduce our two subject matter experts here in about a minute to a minute and a half. We're going to let everyone log in. Hope everyone's having a great July, and we'll get started. Just some housekeeping rules. This is interactive. We've got a question queue. And that's how we're going to answer all your questions through that question queue. This is being recorded. We will get this out to you before noon tomorrow. If we don't get to a lot of these great questions, if we don't get to a lot of these great questions, we will have your account executive reach out to you and answer your question specifically. Everything we're going to do today is from our website. This isn't a PowerPoint presentation. This is live and real. So we'll get started here in about another minute. Hopefully some of you who were on last week's deep dive into debt service coverage were able to get the recording of that, and we look forward to hopefully teaching you a lot about self-employed borrowers, which are the fastest growing segment of the workforce today. So you see our logins are coming. Give it about another 30 seconds and we'll get started. Again, this is being recorded. We will get this out to you before end of day tomorrow. We're going to talk about the highlights of our programs. We're going to talk about what we like to see on a 1003, what we like to see on a credit report. We're going to show you some great tools we have for pricing out bank statement loans and all the other programs that we have here at Angel Oak. And then we're going to talk about marketing. Probably you can see here, we serve underserved borrowers. Our marketing portal might be the most underserved use of a tool that we have available for you, and it's free. So, all right, let's get started here. A couple people still logging in. Great. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We look forward to diving deep into our bank statement program today. And I'm here to introduce our two subject matter experts. Annie Jensen, please introduce yourself and give us a little background.
Hi, everybody. My name's Annie. I cover the Salt Lake territory, and I have been with Angel Oak since 2015. And so it's been a wonderful journey, especially bringing back the non-QM. And I'm really excited to meet with you all today and help answer your questions and bank statements.
Yeah, Annie, great for sharing that. What's 8 years here at Angel Oak. She has a ton of knowledge. Chris Taylor, please introduce yourself.
Hi, I'm Chris Taylor. I'm in the Colorado market, live in Denver. I've also been with Angel Oak, I think same amount of time, since 2015. And it's just been a great journey, really enjoying it.
Yeah, and I've been here over 9 years, so do the math, right? What do we have, about 27 years here, or 25 years here at Angel Oak? And that's key when you're working with the non-QM lenders, longevity and the experience of the account executive. So, but before we dive into the bank statements, we're going to launch a poll here. Who has originated a bank statement loan in the last 12 months? And while you guys are voting on this, I do want to share some stats that are really mind-blowing. In 2020, new business applications grew by over 24% over 2019. That was the largest increase in new business applications in over 10 years. In 2021, new business applications grew by over 22% over 2020. So, and then I believe last year was pretty flat to 2021, but those are really big numbers. There's more self-employed borrowers than there are VA borrowers. So it's really important that you get to learn about these. So 76% of you have not originated a bank statement loan in the last 12 months, which that's why you're here. That's why we've got Annie and Chris, who are the subject matter experts, who are going to teach you how to do these loans. So let's take it away, Annie. Let's show how our
Perfect.
So everything's done here, like I said, on our website. All our programs are here. Annie's going to start off with some highlights of our business bank statement elite program.
Perfect. Thank you, John. So before I dive into the business bank statement program, really what I want to cover first is the bank statement program as a whole and how does it work and who it's designed for. So this program is designed for your borrowers that need to be self-employed for a minimum of 2 years. And the best part about this program is we are not going to be reviewing any of their tax returns. So we don't want to hear about them, burn them, do not show them to us. We don't want to see them. And the way that we are going to calculate their income is we're going to review their bank statements over a 12 to 24 month period. And we're going to average what is going into their account on a monthly deposit basis. So how do we do that? So if we are using a business account, then we are going to look at that business account, monthly deposits either for 12 or 24 months. And so, for example, let's say if we have $20,000 going into that account, then roughly using a 50% expense factor, we'd be using $10,000 a month in income. Now, when it does come to reviewing the business account, we do take into account the expenses of the business. So during the pre-qual, we are working through this with your AE. We will have the borrower complete a business questionnaire, and from that, we will determine the business expense. So most of the time, the expenses will be 50%. Now, however, let's say if the borrower owns a small business or if they work from home and have very little overhead, with a CPA letter to confirm that their business expenses do not exceed a certain amount, the amounts we can go up to is 15%, then we can use that higher amount going into that account. So it does give them more buying power. Same thing if we're using the personal statements. And if they do not have a business account, then we will also apply the same expense factor, especially if they're a DBA account or maybe a Schedule C. However, if we do have a borrower and they do want to use their personal account, then with 2 months of the business account where we can see the expenses coming out, then we will give them 100% of the deposits going into that business account. So in order to use that personal account, they just have to own 25% or more of that business. And in order to use that business account, they just need to own 50% or more of that business. So what I love about the bank statement program, it really gives your borrowers the huge buying power. You know, if they haven't filed tax returns, or maybe if you see they owe money to the government, or if they're filing tax returns and it's not a negative, but let's say it's a positive, but it's not enough where they want to qualify for, then let's always jump in and take a look at their bank statements. 99% of the time, it's going to give them the income that you're looking for to qualify them. And always when you're working with those borrowers at the very beginning and you're thinking this could be a bank statement borrower, ask them for both your personal and business statements, because it really does make a difference, especially when you're working with your account executive in the very beginning and we want to see, okay, which is giving us the most amount of cash flow. We can review them within a matter of seconds and tell you, okay, this is the feedback. We really think it's going to be this best account to use. So that is a high side who this program is designed for and the great benefits of it. So business bank statement lead. So we came up with this program probably about a little bit over a year ago. And the reason why we designed this program is because a majority of these borrowers have really good credit scores and low LTVs. So we wanted to design a program that ultimately gave them the best rate. And so with this program, it's a higher set of underwriting conditions. We do not allow any exceptions, which typically we do exceptions on our loans, but this one we do not allow any exception, and that is so we can reward those borrowers with the best rates possible. So on this program, we can do a purchase, we can do a refinance, we can do cash outs, we can do these on primary, second homes, and refinances. If we are doing a purchase, then it starts at a 660, we go up to 80% LTV for your primary. A second home would start at a 680, going up to 80% LTV on a second home, and then investments would actually start at 700, going up to 80% LTV. Now we do go up to 90% LTV. That is starting with a 720 credit score. And so if you ever have a question, and Chris will be showing this later on today, is Quick Quote. We will show you how you can go in and price out and show you the different LTVs and different scenarios based on their credit scores. So this program, we do go up to a $3 million loan amount, and interest only is also available. And on this program, we can only do warrantable condos. If you want to do non-warrantable condos, then that's going to be on our standard bank statement program. So, but this is a really good high-level overview of our elite program. And if you guys have any further questions, shoot away in the chat.
Yeah, Annie, great job. Thank you. And, you know, I think we're going to start going up over that 3 million, but Don't know when, but heard a little bit of stuff like that yesterday. So stay tuned. And that's what's so
Awesome.
important about that's what's so important about staying in touch with your account executive, because they know the latest and greatest. And you know, when something gets rolled out, they're aware of it the day before. So so Chris, take us through some of the, you know, Annie mentioned some of the differences between the bank statement elite and you know, and what's different between our regular bank statement program. So just take us through some of those highlights, the difference.
Sure. So our standard bank statement program is, I would just basically say, is more flexible. We offer a lower credit score down to 640. Seasoning on bankruptcy foreclosures are 2 years instead of 4. Overall, though, I would say it's just more flexible in terms of allowing exceptions. Non-QM, again, is just, we're just not in a box lender. There's every scenario is different. So there are times when we have to look to making an exception. And I'd say a good third of our loans that we fund are exception-based loans. So in general, if it doesn't meet the elite category, we have the standard program where it can fit into, and we can make a loan work. I always like to just talk about the greatest thing about bank statement loans is that we can calculate your income, look at your credit, and issue you a pre-approval for income and credit before the loan even goes to underwriting. So that's one of the great things I think about a bank statement loan, is that you already know what your income and your credit is. Then it just boils down to the other items. So it's really a great process that we have when we pre-approve a loan, because at that stage we can also submit for the exception that we're looking for. And there's just a myriad. I mean, in all the years I've been doing this, I find new scenarios, you know, every day. So it's always kind of fun to get an exception request in and see if we can make it happen for you. So.
Yeah, and Chris, and I know Annie always does it. And that's the best part of our job, right? And I think Annie and Chris are downplaying their role in this process. They are subject matter experts. They are basically doing a pre-underwrite on your file. And if they are not 100% confident in producing that pre-qual, they've got a help desk they can go to. And as Chris said, you know, that exception is going to follow this file all the way through to underwriting. And Annie mentioned it, we're calculating that income for you up front. You know, and Annie mentioned this, you know, get 24, we're going to judge whether you should use 12 or 24 months. And I'll even go one step further. If you know up front you are working with a self-employed borrower, yeah, go ahead, get their tax returns. We don't want to see them, but you're going to try to go that conventional route, right? Get their bank statements while you're doing it, because a lot of the loans, unfortunately, we get, you've already issued a pre-qual because the borrower put $10,000 on the loan application, and we ran with that, you ran with that, and you get their tax returns, you realize they're only making $4,000. So get their tax, go down those parallel paths. It does not cost $1 to do a pre-qual. So that's just my public service announcement there. So Annie, talk about, you know, again, while you're doing your pre-underwriting, one of the big things you're looking at is that 1003, that loan application. Talk about what you like to see on that and maybe some things you don't want to see on that.
Perfect. Okay. So as we have Justin mentioning the pre-qual stage, so this is very important to have a complete 1003, because we're doing two things during this pre-qual for you. Number one is we're making sure the borrower qualifies. Number two, we're also looking for any little red flag that can potentially keep the loan from closing, or we have to ask for an exception on. So if we receive an incomplete 1003, then that prevents us really from making sure that we have conquered all those little red flags up front, and nothing's going to come and haunt us when we get into underwriting. So it's very important to have a complete 1003. It's going to be very similar to having a conventional 1003. So what do we need to see? I need to see a complete 2-year history for their housing. Most important, if they are renting, then I need to know what they are paying in rent, and we need to make sure that we can verify that rent for 12 months. The reason being, on this program, there is no rent-free allowed, and we have to verify rent. And we also look at payment shock. So I need to know the amount of rent and make sure that the payment shock is not going to be over what we allow. So that's very, very important. Housing history and rent amount. Second most important part is going to be their employment history. We need to see all the details about that company that they own. How long have they owned it? Are they a partner? What is the percentage? But the one thing you do need to remove is remove that income amount. We do not want to see that income amount. And in fact, when you upload that loan into it, into our portal, leave that income blank. We do not need to see that. So we will determine that throughout the pre-qual phase, but please leave that blank on the 1003. So also, assets. We need to know where all the assets are coming from, the down payment and the reserves. If we do find that we need to go ask for an exception, reserves are always a big player. We have a much higher chance if we have a good amount of reserves going into that exception. And we can use business funds. So list all the funds from any business accounts, investment accounts, any other personal accounts they may have on the 1003, because that will make the pre-qual stronger. And then on top of that, liabilities are always listed. We'll review the credit report, but if you can list the liabilities, that's always super helpful. But another section we cannot have blank is the REO section. And the reason being is we pull loan safes when these loans come in for underwriting. If the borrower does not list other properties that they own, then that could be put our DTI in jeopardy. So it's very important that we know all the properties that they own. I had it happen where you get that call and then we have to go in and we have to restructure. So please give us a complete REO section. And then the other most important section is going to be all the information about the loan, our taxes, the HOI, type of property, if it's a one-unit condo and all that, so we can ask those questions. I always try to, it's very important to know we do a pre-qual on a TBD property, and we prefer to do a pre-qual on a TBD property. That way the borrower is not under contract and then all of a sudden we'll lose valuable time doing the pre-qualification. But if they do have to be under contract, or if you know the property they are looking at, please give us the address so we can look it up and make sure that the property will meet our guidelines. If we do issue a pre-qual for TBDs, and definitely once they go under contract, please let us know the address so we can verify that it does meet our guidelines. If it is a condo, we do like to have the condo questionnaire completed up front, and that is just to fully ensure that it will meet our guidelines. We hate to get too far into the process, have an appraisal ordered, and then find out it doesn't meet our guidelines. So we do try to tackle those up front if possible.
Yeah, and Annie went through a lot there, guys, and this is being recorded, so you don't have to take notes here. We're going to get this out to everyone before end of day today, but you can tell how thorough our account executives here at Angel Oak are. And I would say if it is a TBD, if it is a condo, like Annie said, let us know. We'll do a little legwork for you. And I love some of our AEs use the word, they are your confessional booth. Tell them as much as you can up front, because that's just going to help you. And you can tell them, we're going to let Chris go through what he looks for on a credit report, how thorough they are, because they know your borrowers are it's a big purchase. Is their borrowers trusting you, and your referral sources are really important to you. And we really respect that at that pre-qual stage and throughout the entire process. So Chris, give us what you look for on credit reports and, what we allow, maybe even like mortgage late, whatever, but, talk about what we look for on credit reports.
Sure. So we always want to look for, obviously, the credit score. We take the middle of the three scores. Also, the second main requirement are the trade lines. So our basic guideline is 2 for 24, 2 trade lines for 24 months, or 3 for 12. And those have to be standard trade lines, like a credit card. It can't be like a utility bill, that type of thing. And then we always look at, even though if it's not on the credit report, housing history is really important to us. As Annie was stating, we want to verify that they've made, at least 24 housing payment in the history. Usually that's on credit if it's a mortgage, but sometimes it's not. If it's just rent, for example, it'd be canceled checks. We allow 1 times 30 on a mortgage late, so we're a little bit forgiving there. Again, sometimes we can make an exception if there's another late, out there, maybe 24 months out, or in that case. So that's primarily the credit that we're looking for. We do like to see, depth of credit. When it comes to making an exception, which a lot of loans, go in for an exception, having credit depth. If it's a borrower buying a $2 million house, we like to know that they have some experience paying something more than a credit card and a car loan, for example.
Yeah, yeah, sorry, Chris. And the expertise of Chris and Annie looking at credit reports, person might say, and this is why you rely so much on the account executive here is, you might say, well, you have a card note that's been open 4 months, right? Well, they had a previous card note. Let's tie those two together, and that's how we get trade lines. They will work for you and on your behalf. So we already got some great questions coming in. Just want to let everyone know this is being recorded. If we don't get to all your questions, I promise we will have your account executive reach out to you. So we're going to go through, show you our pricing tool. We're going to show you marketing. And so let's jump into these questions. So Annie, if you can clarify, we talked about, Ryan's asking here about what's our max LTV for owner occupied specifically, and then talk about, which we just increased on Elite, second homes and investment properties.
Perfect. So the max that we can do is 90% on a primary. So we need a 720 credit score to do that 90%. And then now on second homes and investment properties, we will actually go up to 85% on a purchase. So that is very helpful. We just need a actually 700 credit score to go up to 85% LTV on those.
Yeah, which is great. I mean, an 85 LTV on a second home and a non-owner occupied is huge. And guess what? I don't know if you said this. I was looking at some cute questions coming in through the queue. No MI, right? No MI, which is huge. So thank you. So Chris, Jennifer's asking here, if there's two individuals on the personal bank statements, do both individuals have to be on the loan?
Yes, they have to be on the loan. Yes.
Great question, Jennifer. Couple other questions coming in here. Annie, talk about, we see them, unfortunately. What about NSFs? What do we allow? And this is one probably get exceptions on, right? But go ahead.
So we do see these from time to time, and they are program specific. So for example, on our Elite, we will allow up to 4 NSFs in a 12-month period. On our standard program, we will allow up to 6, and then case by case up to 10. And then from that point on, it really just depends. I have had exceptions for up to 20 NSFs, but things that fed into that exception was a low LTV, and they actually had high reserves, and also their letter of explanation. And I will be very honest here. When we go into the exception bucket and us as AEs, hey, we need an explanation about this. We didn't know the NSF. We didn't know the credit events. We need to know why. And then I always ask, what is the borrower's plan to prevent these from happening in the future? If we get 2 to 3 lines in an LOX, it's probably not going to go very far. So our credit risk will review to what they put into that. And sometimes I get a lot of explanations and I send them right back and I go, nope, I don't like that. That's not good enough. I need to know why. So yeah, NSF, we definitely do exceptions on those, but borrowers need to help us with that.
Yeah. So great. Thank you, Annie. Chris, we've got Dan asking about closing in an LLC, right? So we talk about, he's asking, so explain when we can, when we can't, if you don't mind.
Sure. Yeah, it has to be for an investment property. Any member that's an owner would have to be on the loan. We don't allow like a corporation, but we would allow an LLC. And I do get this question a lot where the borrower wants to know if it's a recourse loan. The borrower is the one on the note agreement. We can close in the LLC, which is the actual deed. So just to separate the two issues on that.
Yeah. So Annie, another question that always comes up is, what if can I use 2 separate bank accounts?
Great question. We do get that one a lot. And so, yes, you can use 2 separate bank accounts, but under very strict ways that we can do that. So the borrower has to own either 2 separate businesses and have owned them for 2 years. And then we can use a bank statement from each of those businesses Now, the biggest thing we're going to be looking for when we do that pre-qual is there can be no commingling. So if we see transfers back and forth between those businesses, then we're only going to be able to use one statement. Another scenario we can do this under is if, let's say, they own 2 locations. So it's the same business, but they have 2 locations, and we have 2 separate accounts set up for each location, then we can also review both of those statements as well. So we can do them case by case. Biggest thing is no commingling.
Yeah. Thank you, Annie. And then Chris, what about, we've got Ryan asking here about rental history and verification on rent. You mentioned canceled checks, right? So just verify, is it a VOR, canceled checks? Just clarify this, please.
Sure. We don't allow VORs, but we would allow, what we look for basically is an independent way to look at the rent. So if it's a Venmo payment or any electronic payment or canceled checks, we have to verify it that way.
Yeah. And consistently, same amount, consistent, right? So yeah, that's what we're looking for.
We've had exceptions, sometimes there's a reason why a borrower, a person maybe did 1 month paid less rent or something if they had to fix something, but we just need to see consistent rent. So.
Annie, I love where Dan's going with this question. He wants to know how he can get paid.
Okay.
Do we allow borrower paid or lender paid, right?
Great question. So that is entirely up to your lender or broker who you're working for. We as a company give you the option to go either lender paid or borrower paid. So if you go lender paid, it'll be dependent on what your comp plan is, which is selected by the company that you work for, unless it's yourself if you're a broker, or you can go borrower paid. And so you can do anywhere from 0 to 3% going borrower paid. I always suggest, especially if you're working for one of the larger lenders out there and you do want to go borrower paid, always double check with your manager and make sure that it's okay to charge the amount that you are charging borrower pay. Sometimes they don't always relay that information back to us, but you have the choice. We allow you to have that choice.
Great, Annie, thank you. And Chris, Richard's asking, and this is a really good question, if my borrower is a real estate agent, are there any additional special requirements for documentation and you might want to lead this into, Chris, different iterations of expense ratios, right?
Sure. There's two types of realtors. There's the one that works for an agency, and then there's the one that has their own brokerage. So the one that's an agent, we just obviously want to know where they're employed and verify that. And I've had a loan submitted. I've had many different types of realtor loans, but sometimes we can just use their 1099, and sometimes we just take their deposits. Realtors, we do allow a lower expense ratio if they can get a CPA to verify their expense ratio all the way down to 15% in some cases. So that's great. If they own a brokerage, usually we don't allow it in that case. But one of the things that I love to talk about with realtors is they are our #1 borrower. I still think that's the case, that of all of our bank statement loans, if you go out and you talk to a bunch of realtors and you're giving a presentation, you're almost guaranteed to get a realtor's loan themselves. And they're the best testimonial you'll ever have with the product, because once you close their loan, they're a believer in you and the product. So that's the beauty of it all.
Yeah, we're not going to steal Annie's thunder when she covers marketing, so we're not going to. That's the last thing we're going to cover. But I will, Chris. 9% of the loans we close at Angel Oak are actually realtors, right? So if you get 12 in a room, do the math, right? You're going to get one of their loans. So. So anyway, we got Dan's he's in here. So Dan's talking about what was he talking about? I think it was Dan asking about prepayment penalties. Are there any prepayment penalties on bank statement loans?
Great question, Dan. So if you are going primary or second home, then there is no prepayment penalty. If we are doing an investment property, yes, then in states that do allow a prepayment penalty, we will standard price with a 3-year prepay. And then when we jump into quick quote, we will show you where you'll be able to see the prepay, and then on an investment scenario, how you can change that prepay. So you do have the ability to change the prepay. You can either go up to a 4-year prepay or down to a 1-year prepay. We even have options for no prepay. And then we'll show that to you when we run through a quick quote.
Yeah, thank you, Annie. Appreciate that. Chris, talk about, hey, maybe maybe one borrower is self-employed and the spouse, or even that same borrower might be W-2. Give us
Yep.
examples of, can we use both incomes, please?
I get this question all the time, and the answer is yes. If the co-borrower is a W-2 wage earner, we can use that income separately. And if the primary borrower, even the bank statement borrower themselves, have a W-2 job, as long as both jobs are 2 years or more, we can use that as well. There's some nuances between what percent of the bank statement income has to be used in our standard program. It's usually a third, and I believe on Elite it's 50%, Annie, of the total income has to be bank statement income, but we do allow it on both programs.
Yeah. Yeah, thanks, Chris. Because a lot of people start that side gig, right? That side hustle while they're got the confidence of that W-2 coming in, and hey, yeah, we can do that. So so let's talk about, Andy, talk about question just left my head, sorry. Let me go back to the question queue. I think I lost it here. Sorry, guys. Andy, talk about, you mentioned reserves. What are reserves? And you said, I know you mentioned a lot, if we have a lot of reserves, it helps us get those exceptions. But what are the minimum reserves required?
Okay, so minimum reserves required are going to be 6 months. And if we're doing across a cash out transaction, then actually the funds in the cash out can be used towards those reserves. Now, on the Elite program, it does depend on the loan amount. So for example, anything over 1.5 loan amount is going to be 9 months reserves, and then anything over $2 million loan amount will be 12-month reserves. And so, but most of the time it's going to be a standard 6 months. Anything more than that, you're able to tell you during the pre-qual process.
Yeah, so thank you, Annie. Chris, is this available for first-time home buyers?
Yes. All of our programs are. Of course, we have to verify that they've had a rent payment. They can't be rent-free. We do have a little bit more stringent payment shock requirement on a first-time home buyer as well. Other than that, we love to have first-time home buyers. So.
Yeah, and you and Annie touched on it. That's why it's critical. More Annie when she was talking about the loan application. That's why it's critical to really know what they're paying every month in rent, because I mean we get exceptions on payment shock, but it just if a borrower is going from paying $2,000 a month and their mortgage payment's only going to be $2,200 a month, man, that's going to get you exceptions all day long with very, very little payment shock. So it's really good to have that information. So a couple other questions here. Benjamin's asking about, I'll go over to Annie. Benjamin's asking in regards to the REO section, because Annie, you touched on this during the 1003. And REOs are owned and reflect on title as business owned and an entity. Do we need to list, or would it pertain to only personal guaranteed properties? Annie, what's your suggestion to Benjamin? And you mentioned it on the 1003, but just want to drive it home.
Yep, great question. So if they do have investment properties and they are titled in an LLC, they should not pull up on our loan safe, so you do not need to have them on the 1003.
Yeah.
So technically, we should never even find out about them, so don't let us know about them. Only stuff that's going to be titled personal that's going to pull up on that loan safe.
Yeah, great. Couple other quick questions here, Chris, about I guess someone else is coming here a little later and asking about expense factors. Chris, when would you go above a 50% expense factor?
A higher expense factor would be, there's specific businesses that we tend to look at. New home builders, for example, restaurants, car dealerships tend to have higher expense ratios. So I think what I always do with those is I take a look at those, and sometimes I'll go and ask for an actual expense ratio exception in some cases, depending on how big the business is and how many employees they have, et cetera. So.
Yeah, and that's great. And Annie, you could maybe talk about what we require. Part of the documentation required is a business questionnaire, right?
Yep, no, that's what they required on the business questionnaire is how many employees do they have, like how many locations. We ask for a description of the business so that way we can get a really good idea of the size of the business. Is it heavy in inventory? Is it going to have high costs on the back end? So do our best judgment really on that expense factor and what we need to do at the pre-qual stage.
Yeah, and Chris, talk about, self-employed borrowers are all about cash flow, right? Let's talk about how our interest only feature works on our bank statement program.
Sure. We allow a 40-year interest-only payment option, so they're not paying principal in their payment, and we allow that up to 85% LTV on an owner-occupied. It gets expensive at that LTV, but we do allow it. So it does provide a borrower with, with the higher rates that we've experienced, it's softened the blow in some cases for the borrower. So.
Yeah, and a great feature of that, and I'm not sure every interest-only loan out there or feature has this. Any additional funds towards principal, recast that loan the next month. So just be aware of that. And again, it's your self-employed borrowers who are really the most cash flow. They might have a great month where your W-2 borrower, that's the same check every month. But your self-employed borrower might have a great month and might put a large chunk of money towards the principal. And guess what? Next month, that interest-only payment is less. So I love that feature. Annie, you talked about owner-occupied, cash out, refinances. We're seeing a lot of cash outs, right? A great appreciation across the country. Yep. Talk about delayed financing. I know a year and a half ago, it was a really hot button, but just talk about how delayed financing works, please.
Yeah, and it can still be a hot button just because in some markets, real estate is still really, really hot right now, especially once you get down into these properties, that are less than $1 million. They, especially in my area, they fly off the market so fast. And so sometimes for borrowers to go in with the best offer, they're doing all cash offers. And so here we allow you to delay financing. So if you did an all cash offer, then you can come in, do that cash out refinance for up to 6 months. But the best part is we price it out like a purchase transaction. So it will not have that cash out add-on. And we can also go up to the highest LTV, which is 90% LTV. All we need to verify is the funds, 100% of those funds did come from the borrower when they did that purchase transaction. So that is also a big one. If they happen to have done like maybe an investment property where they utilized hard money, then we can also do the same thing. We can do delayed financing on a hard money loan, but we can only do that up to 3 months for your investment property. Also, same thing on a second home. If they paid all cash for a second home, we can do delayed financing. So I haven't seen those as much lately, but still we have that option. It's very helpful to your borrowers, especially if they had to be in a very competitive environment.
Yeah, thank you, Annie. And then Chris, just talk about, it's funny. Someone told me the other day they applied for a Macy's credit card, and you know what the interest rate was on that Macy's credit card? 31.47%. 30, that's true, 31.47%. So Chris, everyone's like, oh, rates are high, but talk about cash out, Chris, because everyone on this call, right? Business, the MBA is projecting that originations are going to fall at less than 1.8 trillion, maybe to 1.5 trillion, which is 30% of what it was 2 years ago. You could create your own business by just doing cash outs. And you'll find in those borrowers who are either carrying monthly credit card debt, or talk about cash out, maybe season it on when we can do the cash out. So just talk a little bit about that. How much in hand? I know you might have to look at your matrix because things are always changing. So, but just, pound out some high level cash out stuff for us.
In general, your own personal home is always going to be the best source, the cheapest source of funding, and especially with all the banking stuff going on. If you're going to start a business or pay off debt, our rates are still pretty good relative to other residential loans. It's all proportional, of course, to LTV and FICO. So higher FICO, lower LTV, the rates are going to be pretty reasonable. And we allow cash out, at least $500,000 on our guidelines, and we can make exceptions on cash out because some Some people have a lot in the United States today, a lot of equity in their house, and it can be deployed. We're very good at doing cash out loans. But it's definitely going to be the least expensive cost. And we allow it on bank statement loans. I'd say I have more cash out loans now than I've ever had. And some people are using it to start a business, to buy another property, pay off debt, all those reasons.
Yeah, Chris, I think that's a great point. And when I heard that 31.47%, and we're seeing credit card debt, it is increasing in America. And I'm playing an away game here today, so I don't have those stats in front of me. But quarter over quarter, it is increasing significantly. And if people are carrying that debt, whether it's 25, 30%, that's a lot. That's a lot of debt that sometimes you can't get out of. So it'd be great to, create your own little refi cash out boom for yourself. So this is being recorded. We will get this out before end of day tomorrow. Just wanted to let that know. We are covering our bank statements here. Chris, let's just talk a little bit about the 1099 program. We've touched on it briefly. We still have questions coming in. We'll get to those. But I know we talked about it mostly for a real estate agent, but just cover some quick highlights here, Chris, if you don't mind.
Sure. Borrower can submit on our bank statement program. Sometimes when the bank statements are not working, we can actually use their 1099. The 1099 would have to be paid to the individual, not their company. We preferably want 2 years on the 1099 relationship with the employer. And overall, it's just designed when a bank statement loan is, for whatever reason, not working. It's a case in point, maybe they have too many NSFs, for example. We can use their 1099 in that case. Realtors, consultants, engineers, those are typically the types of people that qualify. So we would always take their 1099 from the previous year or two, and then in the current year, we typically want one of two things. We want their bank statement deposits, or we would want maybe a year-to-date pay stub from the employer to verify their earnings year-to-date. Everything else is pretty much the same as a bank statement loan, other than the way we document the income, and that's the 1099.
Yeah, and we don't expect everyone to remember everything we've gone through here, and that's the beauty of having a Chris and an Annie at your disposal, who are these subject matter experts who've been doing it, forever, and they're going to take care of you. They're going to hold your hand throughout the entire process, not just the pre-qual stage. It's going to be when you register a loan, when you request disclosures, when you submit. They're going to be holding your hand until the closing. So, Annie, this is a good question. It hasn't come up here, but it's always a good. You said you do pre-quals on TBDs. How long does it take to get a pre-qual back?
Well, sometimes we can have it back to you guys in 24 hours. So the length of the pre-qual really depends on, do we see any red flags and do we see any exceptions that we have to go in and ask for? Do we get a complete 1003? Do we need to go back to you and ask for missing information on the 1003? So if we receive a complete 1003, we don't have to ask any exceptions, and that's going to be back to you within 24, 48 hours. Sometimes pre-quals go up to 5 days. That's because we're gathering information. We have to go. We have to ask for an exception. And that's why I always like to do pre-quals through TBD stage, because if we're all under contract and everybody starts getting concerned about timing. But at the same time, it's also very important that we evaluate, we recognize all the red flags, and we get all the exceptions up front, because the last thing we want to do is to go into underwriting. And this is my always famous line with my LOs is, don't put me in under court. Let's make sure we take the time to do everything up front to get the exceptions and make sure we have a loan that's going to go through with ease. Because the moment you put me in underwriting court, I'm already 6 feet under, and we have to dig ourselves out. And it's like being in real court. We have to put together our case, and I have to go to underwriting, and I have to plead with them. So it's much easier to do that up front. And if it goes 4 to 5 days, understand the patience, and we're doing this for everybody's benefit.
Yeah, Annie, it's the upfront that makes you, the LO, look like a superstar in the long run, right? So let's do the due diligence up front, and it will make the process for closing, which, Chris, I know we're going to jump into how to submit a prequal and how to price something, but what's your average for closing a loan? How long does it take?
Gosh, lately it's been a lot faster. All of my loans have been closing in under 30 days.
Yeah. So,
I mean, it's
and
crazy.
that,
Like I just closed one. It was like, I don't know, under 20 days. So it's going fast.
yeah. So, and not trying to be, if you take your cue from the AE here at Angel Oak, it will go just what Chris said. You'll close in 20 days, provided you are following their cue. And it's not, a control. They know the process inside and out. So Chris, let's talk about how to get us a quick call and how to price a loan. So, I'll,
So
everything's, go ahead.
yeah, so I would just say that the beginning, whenever I get a new bank statement scenario or prequal, the person, the LO usually wants to just email me the bank statements and get a calculation. We try to look at this process a little bit more in depth. We want to give you a real pre-approval, because when we pre-approve a loan, I can't even remember the last time I pre-approved a loan and it was declined. I mean, almost 100% approval when you get the conditional approval.
Mm-hmm.
So that's because we do all this up front. And the starting point is we want you to get some basic loan information and get some basic pricing up front so you can see what the loan looks like before you submit the pre-approval. So we start you at our quick call page, and we want some basic information, want the loan amount, the credit score.
I'm going to go through this, Chris, but you just hit on a point that I find just extremely, extremely valuable to our audience here, right? You and Annie and all of our account executives take a great, great, great deal of pride and pull through, right? You don't, our underwriters don't need practice underwriting files, right? That are not going to close. And that's why, Chris says he could close a deal in 20 days because our underwriters are underwriting files that they know Chris, they know Annie's looked at these, and they know that, they've already had the confessional booth moment with you and your borrower, and, it cruises through the process. So sorry, Chris, I just, that's a big point you made there.
Thanks. Yeah. So just give you an example, we could throw in a loan amount there. We have, the FICO range, the LTV, the state that we're in, what type of transaction, if it's a purchase, refi, cash out, and then this is bank statements, 12 or 24 month. And keep in mind that the 12 or 24 is not really an underwriting thing. It's more of a pricing in some cases. We want to know, if they're a U.S. citizen, owner occupied, or the type of occupancy, and then the compensation type. You can put your lender paid compensation in there. I always try to start with the borrower paid, so you can kind of see the raw pricing of the loan. And then when you do that, we're going to usually have two programs, the Elite and the bank statement program. And I think I'm addressing the bank statement program, but you can see there that usually Elite is, you see a little bit better pricing there. We want you to take the next step in this case and view rates, and you'll get a scale there of what the rate and the pricing relationship is relative to your own compensation program. So you just choose a rate, and keep in mind when you're choosing a rate, you're not locking in or anything, you're just choosing a rate for now. You select that option, and then it's going to take you to the next step, and this is the step where you're going to upload your MISMO file. If you don't have that, you can always bypass this stage. And then we want some basic information from you, who you are, where you're from, a little bit about the loan as well. And this is where you're going to also drop the files in. You can just drag and drop your 1003, your credit report, your 1008, and your bank statements. We've made it really easy to this stuff uploads real quickly. Your bank statement, if you have the questionnaire, if not, we can get you one to fill out. And then after that, any additional documentation and basic credit information, and then you're going to submit the loan, and that goes right to us to start. We jump on it right away. We're going to send it up to our bank statement review team, right, to get a first pass on the income for you. I would say 75% of my first passes, I usually don't really have to do much more. It's probably maybe a third to 25% where we're having to look at the deposits. Maybe we flag some of them or want questions answered, or we want to add some back. That process can sometimes take a day, maybe two. Like Annie said, sometimes it can take a little longer in some cases too.
Yeah, Chris, and this is where you'll have that business questionnaire. You can, everything's easy to find here. Everything's accessible and it doesn't cost anything. You don't need login credentials to do this. You know, and as Annie mentioned, we do them on TBDs. I always say, get us to 24 months. We'll decide whether we should go 12 or 24. And they're gonna, you know, maybe this is only the third year of their business and the most recent 12 months have had really a huge impact. Well, we might want to drop months 13 to 24 to qualify because we know where that bar is trending. So, or conversely, maybe it's not as good and we don't want decline in income, but in most cases, we see these self-employed borrowers, you know, are running and gunning. And if you remember the statistics I said, you know, 3 years ago is when a lot of these businesses started. So they're in their third season of growing their business, which should start taking off for them. So again, this is an easy process. We have a team of people that just calculate bank statements for you, and they're really, really good at it. So yeah, Chris, that was great. So Annie, let's talk about, you know, the fun part, the most underutilized. We serve an underserved market of borrowers. Let's talk about an unutilized group of marketing. So.
Perfect. Well, then let's go ahead and we'll jump into our marketing portal. So let's go ahead and get logged in. And then while John goes ahead and gets logged in, I just want to touch base that on our website, if you don't know who your AE is, you do have an area where you can select Find Your AE. So go on there, select Find Your AE and request to have their information sent over to you so that way you can connect with them. And then also we do emails every Tuesday. So if you are not receiving our emails, then also reach out to your account executive and make sure that we have you set up correctly to receive our emails. As we mentioned earlier, there are always things changing with our programs, and that's the best way to stay in touch to get those weekly updates about what's changing and what's new, especially with guideline changes. We've been doing a lot of enhancements, and so that's to help you guys close more loans. So you really want to receive those weekly emails. You don't want to miss out on a potential deal because you didn't get that information. So let's go ahead and dive into the marketing portal. So if you don't have access to our portal, then just reach out to your account executive after this, and they can go ahead and help you get set up. Super easy to do. Just fill out our broker user form, and we'll have you set up within hours. So once you're set up, then go over to this marketing portal, and there's several different areas we want to go through. So first, you can go through on flyers. And so let's go through and hit on those flyers, John.
Yep.
And these are customizable. So let's go ahead and just click on the bank statement flyer. And we have multiple flyers across all of our products. So that way, if you want to market more than just the bank statement loans, you can see the slew of flyers that we do have. So these are super easy to do. All you have to do is just fill in your information. You can upload your logo, upload your picture, go ahead, hit update, and then you can download. So that way, if maybe you want to go see, you know, some real estate offices or want to do some campaigns, mail campaigns or anything like that, or just have these, you know, with you at all times, just in case you run into those borrowers, then this is very, very handy for you to be able to do amongst any type of email campaigns. So let's go back over to the portal.
Yeah, I'm sorry. I just changed Eric's name to my name and click Save Changes, and it's easy that, right?
Oh, yeah. Yep, super easy. You can make your flyers in a matter of 30 seconds.
Yeah.
Yeah, so.
The beauty of it, Annie, is once you do it for one flyer, it's for all the flyers. So.
Yep, it'll update everything.
Yep. All right.
Okay, so let's go back over to the marketing portal. Let's go down to social media. So I have been able to work with a slew of loan officers and brokers since 2015. And during that time, I have seen their marketing evolve, and I have seen really where they've gotten the payback and gotten a lot of referrals. So in the very beginning, it seemed like a lot of them were doing a lot of email campaigns. And a lot of the warm networks that they were able to find that they were emailing out to were CPAs, asset managers, real estate agents, anybody they came in contact to in the business that could possibly potentially refer them over a borrower. That is who they were contacting to, and that is who they were emailing to. Now, over the course of time, a lot of them have migrated. Some of them are still doing a lot of the email campaigns, but a lot of them now are 100% on social media. So I see a lot of them on LinkedIn and a lot of them on Instagram. And what they're doing when they're posting is they are posting 2 to 3 times a week. So here you can see we have these already pre-made. So if you want to do a post on Instagram or LinkedIn or even Facebook, all you can do is go ahead and download these, and then these are ready for you to post. Now, a lot of the times what I'm seeing my brokers post is they're posting, like I said earlier, 2 to 3 times a week, and they're posting what they have access to. So they're posting, hey, I can do a cash out to 80%, or I can do a cash out to 60% and get you 1.5 million cash in hand. So they're posting about the access and the programs they have access to and how they can help their borrowers. But then most importantly, and we always know that stories sell, is every time they have a transaction that closes, they're posting about an individual transaction. So if it's a bank statement deal, why it couldn't go conventional, how they came into contact with the borrower, the program that we took them on, and how we got that loan closed. So then they're painting that story amongst their entire referral network that these loans close. I can get these loans, I have access to these loans, most importantly, these loans close. So they're painting that whole picture, and they're constantly in front of their referral market, referral database. So let's also jump back into that portal.
Hey, Annie, one question. I have a good question from Dan. Dan, we appreciate your questions. You know, I see you can add disclosure information to your marketing flyers. Do the disclosures print at the bottom of the flyer? It's a great question, Dan.
Mm-hmm. Yep, and they do.
Yeah, Dan, so they will. And then Marciana, I hope I'm pronouncing your name. Do we need to go through our compliance department? If you are with a lot of larger lenders, do require that you do go through your compliance department. So before you decide to print these out, definitely check with your compliance department first. So, but you have access to this as long as you have your login credentials. Sorry, Annie, just wanted to get a couple more questions answered.
No, those are great questions. And so let's pop over to presentations. And this is really a very powerful tool for you guys. So we have presentations. So if you're meeting with realtors, then we have a short presentation, a long presentation. You can download this into PowerPoint, and this is also customizable. But what's even more powerful is, earlier I told you how you can find your local AE. So if you're not in contact with your local AE, and this is the reason why we do have local AEs established all over the country, is we want to partner with you on these presentations. So we will come into the office. We understand you're not the expert in these. We are the expert in these. We have the stories that sell. Stories always sell. So bring in your local account executive into these realtor presentations. It's very different than this presentation. Really what we're going to highlight is the type of borrowers that really benefit from these programs and the stories that sell. We're going to tell about the deals we've closed and get them hyped up and really build that trust in you and us to be able to close these deals for them. So that way they have the confidence that when they first meet with these borrowers, and maybe they hear, something, oh, these aren't the cream of the crop borrowers. Maybe they've been turned down before. They have that confidence to reach out to you that we're going to be able to have the right program for them. And so here's a little bit about a little bit what that deck looks like. And so it just goes over all of our programs. And then, like I said, really bring us in. This is what we're here for. If it's something where we can't attend in person, then we can definitely set up a Zoom meeting and join you via online and have all these wonderful stories that sell for you online. So we're very flexible in how we're able to do this for you.
Yeah, Annie, and you said it, this is the most powerful presentation because you really are educating and informing your sphere of influence, your referral source on the programs that you have access to. And I've done hundreds of these, and Annie and Chris and all our account executives across the country, wherever they are able to do these. Like Annie said, if it's not in person, via Zoom. And I'm going to use Dan because Dan's been a great participant. We all been great participants, but Dan's been asked a lot of questions. Dan, I would go in and do this presentation on your behalf, and I go in there, I don't say anything about Angel Oak or you know, I kind of joke about it. I go in there like I'm in the witness protection program, and I would go in there and say, you know, we're just one of Dan's investors, right? Dan has access to other investors, but we're here to talk about just one of Dan's investors. And these are the types of programs that Dan can close. After we talk about the debt service coverage ratio program. So what are you going to do when you have a investor? You're going to call Dan. And the whole presentation is all about Dan has access to. It is so powerful. We threw out a statistic there earlier. If you get 12 realtors in a room, Chris said this, you're going to get one of their deals, right? So anyway, I know we're getting near the top. We're at the top of the hour. This is such an don't let not knowing or being an expert in non-QM keep you from marketing these programs, because you see the experts that we have here at Angel Oak, not just Annie, not just Chris, all the account executives across the country. So we're going to wrap this up. Chris, in closing, share something with us, please.
Okay, I can't emphasize enough. You know, you want to be armed with data quickly. A lot of times I'll get an email saying that you know, you want to just see a bunch of guidelines. Really use us. We are your guideline. We can cut to the chase. We can give you quick answers. We can get you a pretty quick pre-approval that you can go to the bank to and give your borrower that pre-approval. It's really important. We can get you an exception in many cases. So what you need is information. What you need is, you know, is good information and reliable right away. And that's what we're here to help you with.
Yeah, thank you, Chris. And then Annie?
Well, one thing I will say, it's wonderful being in the middle of July, everybody's gone on vacations, and to see the amount of people attending this bank statement webinar today, wanting to learn and do something new. I always have a favorite thing, I always push myself, and I hate being in the comfort zone. You know, if I get too comfortable, I'm always trying to find a way. How do I get out of my comfort zone? How do I push myself? How do I do something new? How do I do something that makes me insanely uncomfortable? And so this is one of the blessings of this downtime. Yeah, it's a little bit slower, but it gives you the opportunity to jump in and learn something new. You know, when we're super busy, we're always reaping the benefits of it being busy. But, you know, now's the time, do something new, learn about these programs. I talk to LOs every day and, oh, I don't want to do these loans. I don't have time. I don't want to learn. No, get out of your comfort zone, learn. Because I promise you, if you learn and you do the marketing and you learn how to work with these borrowers, it's going to open up an entire new revenue source. So now is a great time. I love seeing this many people because I love potentially you're getting out of your comfort zone and doing something new. And that's what I love about it.
Yeah, thank you, Annie. It's awesome. And obviously you took the time today to register and attend this webinar. So that's the first step, right? Let us take you to that second, third, and fourth, fifth step of learning about these programs, marketing these programs, and helping you close more loans. There are just a couple of other things. We're not doing a webinar in the month of August. We're going to do 3. We're going to do the bank statement again, debt service coverage, and we're going to cover full doc. You might ask, why are you going to cover full doc? If I can't go conventional, is it going to get done? Yeah, we can get those tough deals done, whether it's, you know, seasoning on bankruptcies or foreclosures, or even specifically, we allow a 1-year tax return with only 2 years of self-employment. So we talked about the stats of how many people have become self-employed. You know, government requires, I think, 5 years if you want to use a 1-year tax return. So think about that. And then in closing, there's a survey at the end. Please take it. We're always looking for feedback on what we can do better during these webinars. We've been doing these now for almost 3 years straight. So we're always looking to evolve. So for those of you who have worked with Angel Oak, thank you for your business. For those of you who have not, we hope you can trust us with your business, and we will do what we were going to say. So have a great rest of your month, great rest of your day. Thank you, Annie. Thank you, Chris. Appreciate your knowledge and professionalism as always. Thank you. Everyone have a great afternoon.
Thank you. Thanks.